Check. Alright, let's get it. The voice thing should be working too. So if you got in here before I started, I will go back out and come back in. It should be working. Okay, cool. Alright. So, what transpired yesterday leading into today? Can y'all hear me and can y'all see me? Yeah. Morning, fellas. Appreciate that. All right, let's go ahead and get into it. So, like I said yesterday, we're making new highs. So, when you're making new highs like this, you have to go off of current price action. There's nothing that you can really hang on to, because the thing is, price can do one or two things. It's either going to tank down to retrace however far we have pushed up. Like, we are well past this high here, so we're here right now. So let's see how price just handles this area here. That's why I marked this 15-minute consolidation right here. So we took out that high. I'm just looking to see what price wants to do from here and see how this volume is implemented. Even if I had a trade opportunity here, like right now, my question for myself be, would I take it? I'm not too sure, because where the market is right now. So would I rather wait for a better opportunity or take an opportunity right now? It depends on like how it was yesterday compared to today. Okay, am I using profits from yesterday for today? I'd probably be more lenient to doing it. But since I didn't trade yesterday at all, I let it pass. Today, I'm going to treat today as like a Monday, because I want to wait and see the best opportunity, because that first trade of the week, that builds or compounds you for the rest of the week, because you can take that momentum and use that to leverage for the new day. So let's say if I'm risking, let's say $100 to get 300. Then when the next day, if I made 300, now I can take 200 and then use that 200 to make 6. It's the compound effect. So I don't want to mess that up by just taking anything for the first trade for the first week, even if that means I'm missing a whole day. Now, in the beginning, when you're scalping or you're getting in and out, you don't mind getting in and out, because that's just part of what you're doing, especially when you're trying to learn. But as you get more and more into it, you learn to take more quality trades than anything. So that's what I focus on, even if that causes me to miss out. So like even for myself, I haven't even been looking at the lower time frame. Like 15 second, 1 minute, I haven't even been looking at it. And the reason for that is because it's already enticing enough. And right now I'm practicing patience at these new highs. Because what happens is you'll try to anticipate that drop. And then you'll see so many things on the lower time frame that tells you that the drop is coming, and then it pushes back up. So we're at all-time highs. So I'd rather see it on a higher time frame, at least a 3-5 minute, and then from there dictate if I want to go down. But I haven't felt the need to go down at all. So I just want to see how price plays out in that predicament. So right now we have something that's popping up. You have this model here, this inversion here on a 15 minute. Here clear as day. So now you could look at it from two different perspectives. Either you're using this as a sell model, or you're using it as a confluence. Me right now, because the market's about to open, I will use it as a confluence instead of a model I'm trading off of. And that means all I'm doing is looking at it, marking it up, and then going to a lower time frame and finding a model inside of this. So basically, you see how we had this push up right here. So basically from here all the way up and just inside of this, is there something present that I can use to take to the downside? If that's what the market wants to do. Because you see our initial stop loss is right here already. So if your entry was here, then that's taking you 17 points. That's nothing, And then from that, initial stop loss is 10. So you're not even getting a 1-to-1. And like I told you guys, something I want to do later on this week is just go over risk management. Spend a whole hour or so going over risk management and the 1-to-2, 1-to-3, 1-to-1 thing, because it's a way that you guys need to look at it. So just for instance, real quick before the market opens, say you have a trade like this, right? Oh, I'm also acting slow. Okay, so say you have a trade like this, right? And you're going for your usual, let's say 1-to-3. So boom, that was crazy. That's perfect. So let's say this is your 1-to-3, but let's say price went like this and just tapped into it and then took off. And let's say as it took off, you're moving your stop loss. Your R drastically changes. So your risk to reward is not based on just the risk in general. It's based on whatever risk the market gave you. So this probably went into drawdown, maybe 2 points, 2 or 3 points. So if it takes off from there, that's your initial risk. So you didn't risk 1-to-3. You risked whatever this was, and then it took off. And then if you choose to close it or to break even or move your stop loss, that's based on you. But the risk in the beginning is your initial risk. So what am I getting to? For the students that are having a hard time with risk for some reason, you can make it 10 times easier on yourself. This is going to be a bigger path to getting where you're trying to go. But for the most part, it'll make the most sense for you when it comes to just being comfortable with taking trades. And there's a method to it. And I want to go over that method, not more so today because I want to focus on current price action, but I can go into it a little bit because it is recorded so you guys can watch it. But whenever you have a trade like this and that trade is giving you that 1-to-3 like this, depending on where your take profit is, let's say this take profit is 19 points. So let's call it 20 points. Just put your stop loss to 1-to-1. And now, why is that? For one, it's going to have you drop down on your actual contract size because of how many points you're risking, and you're only aiming for a 1-to-1. That's initially. So the thing is once the trade takes off and you feel comfortable, like let's say the trade was here, and you feel like it's going up, it's pretty much good, Then you take that 1-to-1 and then you bring it all the way in. And then you cut it. But you have to be confident in the trade first. So what that does is it helps you with having too much size on your trades. So a lot of times you guys, let's say you're trying to build an account and you're trying to build it fast. So you go from so let's say for instance with this example, let's say your trade is 1-to-3, you risk 6 points. 6 points is great for 20 points. That's a great move. But just for this instance, we're gonna give it some clarification. So you got 6 points, you targeted 19, that's a 1-to-3. Then you say, man, 6 points, I can go super heavy on my trade. So instead of me doing 1 micro like I usually do, I'll do 5, 6, like even 4, something that's out the norm for you. But now when you get in drawdown, you're getting in a lot heavier drawdown than you usually do. So like, I'll give you an example for me. Like, I'm comfortable with the at max 5 contracts. Anything more than 5 contracts, I know that me focusing on the trade, I get uneasy because I'm relying more on P&L than the actual trade. And that's your focus, is the trade. So if your P&L or your P&L watching and you're focusing more on what you're making than the trade, you probably have too much risk on. So in this case, if you don't have the control to control how much you're risking, and you feel like, okay, man, my stop loss is always there, or it either get hit, either make it a 1-to-2. I love 1-to-2s. I don't only just talk about 1-to-3s all the time. I'll take a 1-to-2 in a heartbeat. But if a 1-to-3 is more presentable, I'll take that, or I'll wait for that. But in this case, if you're having trouble with that, just go to a 1-to-1. And what that's going to do is you're going to go to 1-to-1, and your risk is going to be this. Now you're risking that 1950 to get that 1950, but that's not your risk for the whole trade. That's your risk to see if the trade is going to play out. And then from there, that's when the opportunity presents itself. And then from there, once it takes off and you're starting to rise up and it starts to get into an area where you feel comfortable at, then you will go ahead and move it. So what that 1-to-1 does, it gives you the cushion or the risk mentally to say, you know what, I'm okay with risking this to get this. So initially you're trying to risk, let's say 200 to get 200 or 400 to get 400. But then as it takes off, you're cutting that risk in half, almost to a fraction of it after it takes off. But what the thing with that is if you're in drawdown, let's say you got that 1-to-1 right here. Remember where a 1-to-3 would have been at. So let's say, just for instance, because it's a way you gotta do it. I was looking at it this weekend, just kind of for students that's having trouble with trusting their trade. And this is a challenge because you have to be mentally prepared to do the 1-to-1 because you got to be in control too. And what I mean by that is like, okay, say 1-to-3 is here. If I take this trade and put it at 1-to-1, my mental stop for myself is here. But let's say the trade comes down to here and plays around a little bit. It's like, I still believe it in almost, and then it pushes back up. Cool. But now what this is doing is giving you enough room to let the trade play out. And then okay, if it really is not going below here and it goes back up, then you can break it to a 1-to-3 or 3-to-1. So that's risk management. But you also have to realize that you're opening up your trade to more risk. But that depends on your contract size. So if you have a decent contract size, which this is going to do because you was risking 6 points before, now you have to risk 19. So you're going to go down on contract size. So that means when you move your stop loss to that 1-to-3, once it pushes up, then that risk jumps up. That risk is substantially smaller. But also if it comes back and stop you out, you barely lose anything, but you gave yourself enough room to let it play out. So I want to go over some more examples of that later on. The market's about to open in a minute. Well, just open. But yeah, we'll go with some more examples of that later on. I want to do a call on that. Okay, so as you see, I didn't take that sell on the 15-minute because why? The market is bullish. You don't want to go against the trend right now. We don't know when this market is going to slow down. But if you're always thinking, the model that we have is a reversal model. So when you're looking for your trades, you have to think reversal or in the form of a continuation. Like that will be in the form of continuation will be down here. But since the market is opening, I'm not jumping to anything because that's what people get caught up at, jumping to a trade. And then you try to take this and then it drops off. Like, well, think about it. This would have been a sale. So even if this would have played out, you would have had to get past this 15-minute consolidation as well. But if the 15-minute consolidation is not there, you're looking at a clear path down. But that's not what's going to happen because you've seen this high swept and then this low swept. But price is now going for this high, like it's supposed to do. Price is just trending with the market. So all we're doing is trying to get in sync or in line with this. But you can't hang your hat on, I missed this push. These are going to happen in the market. You have to realize that we are at all-time highs. I've seen this before. You let the market do its thing, you're going to have probably more days you miss trades than not. If you're trying to wait for the market to give you a proper trade on the higher time frame, you can go to the lower time frame and find the trade. The thing is with a lower time frame, you need to make sure that you're trending with the market. That's all. So now what I want to do is, now since this market is kind of going back and forth, let's try to get in sync with the market. And the thing yesterday with the sessions and stuff, I was looking into it. I don't know why it's getting erased. I'm not sure, but I got it open again, so the link should be in the group. And whoever doesn't have it, they can click it and then make a copy of it and then copy that indicator and put it on yours. So, and then I'm gonna make a little quick video on how to save it. Okay, so look at that. Look at all this. Remember, this inversion, this confirmation is off of 15 minutes. So this whole candle can be extremely bullish now and then extremely bearish. So until this candle closes, I'm not going to take this off because it's reminding me where price is right now. So now, let's go. Put the 15 minute over here. Then we're going to go 3 minute here. Let's just focus. And then markets like this, where it's just extremely bullish up, and then you like, man, I didn't get the chicken to catch it. Well, you have a 1 minute model right here. But you have to stick to your rules. My rule is I'm not trying to catch a trade at market open. I'm perfectly fine with that. And then a lot of times, like let's say for instance, you see a model and you think you're supposed to take everything. If you don't have rules, then one day you're going to not follow your rule. Like just imagine this. For the ones, I'm putting it into perspective. So for the ones that's funded or trying to get funded, just so we can have a universal clarification. Let's say you almost at payout and you got 3K in the account, and then you got 1 day left to your payout. You like, man, I'm gonna get this payout. I'm gonna do crazy. Well, I'm about to do this. I'm about to do that. And then you have 1 day left, and you tell yourself that you never trade market open. You trade market open. As soon as the market opens, you're in the trade because it's the last day. You're trying to make the best profits, and then you get slippage. The market opens and it immediately drops down 40 points. They're not going to close your trade for 40 points. They may close it for 50 or 60 or even 70 because of the slippage. And now guess what? Now that account that you had is not eligible for payout. And now you go on tilt because of what just happened. You're not immediately going to, after that happens, you're not immediately going to close it. You're not going to say, I'm done today, that's it. You're going to look at the chart and you're going to try to find the opportunity to get back. And then now that causes tilt. Next thing you know, now you're dealing with that. So that right there in itself is a big component into what you're looking for. So I don't go chasing things like this, even if I see it, because I have to stick to my rules. My rule is that I like taking trades at 9:30 open. Now, that's why I move my time. For me personally, I trade in the morning, early in the morning, from 6 a.m., which is 7 a.m. here, to about almost close to market open. So when I'm live and we're looking at the market, I have to give you the same discipline that I have already, which is I can't trade at market open. But I'm going to show you things or possibilities that was there. Think about it. You had a 15-minute that inversion and confirmation that's bouncing off of a 15-minute consolidation. Then you had a 1-minute model that was taking out this low. So the least you could have went for is at least this high, which would have been the initial stop loss, or this high, which we were pushing up to. So that would have been here for like 8 points. Let's call it 10, and then it's just 30. So that's a 1 and 3 right there. But this whole push up is only 62 points. Back a couple of years ago, that would be a lot for NASDAQ right now. Like 62 points would be crazy. But right now, honestly, in this market, a crazy move is like 150 points. So, and this could go for 150 points, but you have to be okay with being in this market and being exposed to things like this. So now what happens is we have this expansion and now wait for consolidation. Now, when is the consolidation going to start? We don't know. You just have to let markets like this play out. You can't chase stuff like this. But for the ones that want to take trades at the market open, you definitely can, because that's not me telling you that you can't. That's me telling you that's my rules for myself. But if you're taking trades at market open, I'm telling you right now, the way the market opening is right, the way the market's opening right now, when it changes and you don't realize it and you get stopped out more than not, you're gonna be like, what is going on with the market? And 9 times out of 10, it's just that slippage that you get when the market opens. But that's when we got good volume. So, but in a market like right now, you can perfectly be able to take those trades and be okay with the risk. But me, I'd rather just not do it. I'd rather just wait. And you gotta have your rules set in stone on the index card, something to where it's visible right in front of you. Like I keep this. This is my whiteboard I keep on my desk, and I just jot down notes on this. I got the pad right here, notepad, paper, and all that stuff. So all that stuff makes a big difference, man. It really, really does. And you can have a good streak, and then it can be over with in a blink of an eye because you wouldn't realize that you wasn't following the rules the whole time. You break one, you break another, and it's just a revolving door. So what I want to do right now, while that's pushing up, I want to check gold. Be quick. Complete opposite. Yes, sir. As always. And see, yeah, gold's right here. Get that sell model. We broke out of it here. So, yeah, confirmation. So, oh yeah, this too. This can be tricky. Let me show you. Oh, we're waiting for NQ to settle. So you see how we had this inversion here, and then as soon as you have this break there, that gives you your confirmation initially, and then you push up, and then as soon as it pushes up, you get this. So this would have been your initial stop loss, and it gets hit. And then you look, and then you have like a little tiny one right here, right there. So that to that would be another imbalance, and then you have another one right here. In this case, what I would do if I'm confused on which one I need to take, look for that consolidation right before that drop and we broke out of this here. And then once you have that, mark up the high and low of that price leg. And then once you mark up the high and low of that price leg and you see where premium is, then you look for the imbalance inside of premium instead of a discount, because you're looking for a sale. So now instead of you looking for that one, you'd have been looking for this one here. And that's why premium and discount is so important. So you wouldn't have got tricked by that one, because that is the candle as soon as it closed. But look how big this range is, and then look how far off that confirmation was in comparison to this range. It's right at the bottom, but you have this whole price tag that it has to retrace. So is it going to retrace a little bit up and then drop down? That can be the possibility, could have just went inside of here and then dropped to the downside. But looking as if we have 1, 2, and then 3 imbalances, and it's like, which one do I take? This one or this one or that one? Then use that price leg and look at that price leg pushing down, and then measure that and see where that premium is for that sale, and then that'll be that right there. And then you see on the 3-minute, you had this consolidation that push up, break down, and then this consolidation here. Let me show you right there. So price is playing out this consolidation the whole entire time. So when you're able to make things make sense, it's not because you're just randomly putting things together. You're finding the story in which everything is happening. And this is happening on every single pair, every single day. So that's why I try to trade more than one pair, because you can get something like NAS where it's just running, and then you're like, okay, well, I can't catch NAS today. So this is why I tell you guys in the beginning, when you're first learning, you want to focus on one pair, because you want to get good with seeing one pair and knowing its tendencies and knowing how it moves and when it moves. And okay, if it moves like that, then what is it probably trying to tell me? But once you got the concept of how price is in general, also tied to the model and how we look at price, you take that same theory or same mindset and you apply that to every single chart. So now, depending on the trader that you are, then your opportunities are going to be based off of what market is giving you the best trade for today. So for me, I like when the market is reversing. So continuation is cool, but I like to catch when you get that nice drop or that nice push up off a reversal. So for me, I'm going through different markets and I'm looking for that, but that doesn't mean that I can't find anything, which I can. But you don't want to force anything either. So for me, looking for continuation, all I would be looking for is a lower time frame move for that continuation of the trend of the market. Or if you're looking for a higher time frame, you're looking for just a decent setup. So in that case, I can go and say, okay, dang, Nash is already pushed up. Okay, gold, look at gold. But you have to have different pairs that move differently, but you have to know which ones move differently. So for me, you have ENQ and ES. These move identical. So if you look at ENQ, you got this big expansion up on ENQ, and then you have this big 15-minute candle with this long wick that's been happening right now. And then on ES, you have this 15-minute here, and then this 15-minute here, and then you have all this consolidation. ES and NAS are supposed to move together. So when they're not, then you got to make sense of what's going on with the market. So like if, for instance, just give you a quick example. This right here is a smart, is a divergence between ES and NQ. So basically whenever NQ and ES, they're supposed to make higher highs and higher lows together, and when they're not in sync. So in this case, you see you have this low and then this higher high, and then the same thing, even though we had this bunched up consolidation, it did the same exact thing here. And then prices pushing to the downside. So it's just whichever one is giving you the best trade. ES is just a lot slower when it comes to points. And then you have ES and NQ that move together. You have gold that moves by itself. It just moves how it wants. You have YM, which is US 30. This is very, very wicky. Like, look at this one wick right here. This whole wick by itself is 164 points. But with YM, it doesn't move by ticks. It only moves by points. It's just for one mini contract, it's $5 a point. So you can control your risk a lot better on YM, but the problem is it's real wicky and it moves very heavy. So if you're not good with wicks or not good at seeing wicks, this is like the worst pair to trade for you, because when it's got volume, it could be a nightmare, as you see in that candle right there, and that's normal. And then oil is a good pair. So out of those pairs right there, you're able to find what market is doing the best thing for you and adjust to that. But you have to know the contract sizes, why it moves, how it moves. So NQ, I know that this is the 100 top tech companies. And then when it's probably not moving, I can probably go look at news, but I'm not a news trader. So I just look at technicals. What is the market giving you? What is the market showing you? Look for the model based on directional bias and take your trade. Done. So that's how you would play on that. Second. So now let's go ahead and home back in on NAS. So I don't want to get too far off of price action. So looking at NAS right now, we got this super long wick, and then price is pulling back to the downside. So you automatically know that price either wants to come fill this imbalance here, or we're going to continue kind of just stalling out here, and the next candle comes and drops into it, and then from there, depending on what price wants to do. But we are still inside of a continuation. Now, what will make it not a continuation? So what we had to have, because we had the consolidation now, you really want to see price break through all of this and start to show signs of wanting to go to the downside, but you can't force it. So you just have to wait for price action to line up. So as normal, what is a model for us? Well, it'll be this inversion right here. And then after that close, see if we get confirmation. But that's just you following what price action is giving you right now. So okay, and then what I'm gonna do for the ones who want to see the 1 minute, I'm gonna go to the 1 minute, kind of follow it. I'm not focused on the 1 minute. I'm gonna tell you right now, if it's not a 3 minute, 5 minute, 15 minute, I don't want it. That's just my preference right now, because I'm not trying to entice myself to take a trade, but I'm gonna show you guys. I know some people want to see it, so let's just put this in the folder for right now. Let me go to the 1 minute and show you what I'm seeing so far. All right, so from the 1 minute, just focus on this push up. You see we had this consolidation here, and that's from this expansion we had here. But you see where this came from. This drop down came from pretty much this consolidation here. You can call this the consolidation here. You can even say it like this. And then you can, the reason why I would say this instead of all this is because I'm looking at initially when it started going back and forth, we broke out of it, came back above it, and then this confirmed it, that this was that consolidation, and then we pushed up to the upside. So now that we have that, and then price is pushing up, we had this long wick here. So you can use this wick to see how price is acting at this wick here. And then this is gonna be just me navigating the 1 minute. If somebody sees a 15, a 5 or a 3 minute setup, let me know. I'm gonna just focus on showing you guys marking up the 1 minute for right now. Okay, so boom, there. So that'll be our 1 minute, right? So price has broke through that, and now we're punching to the downside. So are we going to come back to this consolidation to take out these lows, and then from there, what is it going to try to do? So when the price pushed up and then we pushed to the downside, we know we had this inversion here. So that'll be your inversion. And as price is pushing to the downside, you had confirmation here. And then now we're back at the consolidation. So from here, you want to see how price is going to react at this consolidation after it took out this low here. And then inside of here, you do have this. You got that there. And that there. And remember, this is the 1 minute. You don't give the 1 minute the same weight as a 15 minute. Like you like, oh, it should have stopped right there on the dime and then went up. Like this is a 1 minute chart. So you're just flowing with it. Something gets broken, it become useful, then you go on to the next. You don't dwell on what it just did. Just wait for that candle to close, and once the candle closes, you follow it. This is a 1 minute chart. And this is why a 1 minute chart will get you chopped up. Because if you don't have a narrative already to why it's doing these things, then that's where you get chopped up at. Just follow it. I'll glance at the 3 minute in a minute. Let's see how this push off. So I'm not going to go all the way over here and then look at what happened days and days ago. Yeah, you can do that. But when I'm looking at lower time frame, the whole purpose for me even being on a lower time frame is current price. If I'm looking back at something that I probably wanted to be maybe like an hour ago, if that. But if it's like hours ago and I'm on the 1 minute, something that happened hours ago, could it touch it? Could it bounce off of it? Yeah. I'd rather have concrete evidence that price wants to do something, and that's based off of the higher time frame. And the higher time frame for a 1 minute can be a 5 minute, it can be a 15 minute. It doesn't have to be an hour. So now from here, we got this wick. So even though we have this wick here, I would have looked at this wick midpoint because of the location of where it's at, but look how it's presented. This wick is right at the top of this confirmation. So if price wants to continue to the upside, if it wants to close above this midpoint and go above this consolidation, then we can look to continue back up to the upside. But then look what it has to run into. Here, here, here. So is it going to be a clean push up? Well, we just took out this low. So what does price now want to do? Well, you look at this here from this high to this low. You can say, okay, at least it's somewhere up in here, and then we can start to have trouble because all this is going to be a discount. So let's see how this plays out. And then let me glance. 5 minute real fast. I could just keep it over here. Yeah. So you can see the comparison. But see again, everything I'm doing on the 1 minute, I want to keep on the 1 minute. Don't clutter your charts up. Because that's how you get all confused and tangled up with price action. That's the last thing you want. Be tangled up with price action because you got too much stuff on your chart. So I want to keep my chart as clean as possible. You guys always know I preach that. Keeping your chart clean. Trust me, I would love a nice opportunity today. But you can't rush the markets, man. For your opportunity, for your setup, what you're seeing. That's the main thing. Don't lose sight in that. You ask the market or you tell the market what you want to see. And if it's not giving you what you're used to seeing or what you want to see, then you say, okay, this is not the idea or the trade that I had in mind or what I wanted to see. It's not happening. Okay, cool. And you go about your day. So that's that 15 minute. Let me keep this on the 15 minute. Here. Because you want to get good at navigating. I'm telling you guys, once you get good at navigating, it's going to become so easy. And not easy as in you're not going to have trouble with price. Just easy because you're just going to put yourself at a sense of ease. When you have bad days, when you have good days, it's even keeled the whole time. But that all comes from you knowing how to navigate the market. So what I want to do on the 1 minute is show you how I navigate on the 1 minute, and you do the same thing, and you just magnify it. Or you could just take it and make it bigger. So you do it on a bigger scale. Same thing I'm doing on the 1 minute, you can do on a 5 minute, 3 minute, 15 minute. It's just this is giving me faster price action to show you. I wish I could show you this like happen on a 5 or 3 minute, but it's not happening right now. But until it does, I can show you in 1 minute. Because on a 5 minute, all you're getting is just taking out this high and wicking this low. Then you still have this push up here, but we are sitting inside of this imbalance right here. So this 5 minute imbalance right here, we're sitting inside of. and then price is just waiting to come up out of that. So even if I mark it up, so I can show you, keep that on the 5 minute there. So that's what price is doing right now. Okay. There, OCD. So we're still in that range. Well, we broke the midpoint here. We tapped it twice, and we finally broke above it. And then the next candle immediately dropped to the downside. So now that's showing signs of expansion of wanting to go to the downside, based off the fact that we had these two candles close right at the midpoint of that wick, and then the very next candle blew through it, and then the candle after that dropped down and took out that low, failing to take out the high. So now that's showing me bearishness to the downside. So imagine if this was higher time frame. You can even look at this like an hour. Imagine if this is every candle was 1 hour. That's how you navigate how price could potentially play out. Like if you would have seen this on an hour and you seen it stopped at this midpoint twice, the next hour pushed up and the next hour gave an expansion to the downside. That can give you context clues that price wants to go down, but you know where you're at. And then you can say, well, we're in a kind of a tight area. I want to wait. Or depending on what the higher time frame, like if you're looking at an hour, then you'd be looking at a 4 hour or daily, or you're looking at a 5 minute and a 1 minute. But that's how you got to make sure you're waiting for the right opportunities, because look at the 1 minute and then look at the 5 minute. When it's pushing up hard or pushing down hard, none of that's like amusing to me or like, oh, whoa, or wow, because you get used to seeing this stuff happen every single day. So even when it jumps super crazy or does something super crazy, you don't feel no way, because it's just, at the end of the day, you know, price action is price action. So this push up, why I'm not enthusiastic about this push up, because I already seen it broke the midpoint of the consolidation. Of this wick. So that's still showing signs of bullishness. Bearishness would have been it just kept touching the midpoint and didn't want to go above it. But since it went above it, that's showing a willingness to probably go back above, or we could have punched to the downside based off the price going down here. But you're putting yourself in perspective of where price is at based off of a higher time frame for you. So in this case, our higher time frame right now is a 5 minute. We're inside a 5 minute imbalance. And then look at all these wicks we have. The last 10 minutes was just super long wicks. Price wants to continue to the downside, it will go into a premium and show us a willingness to want to do that. But until then, we're sitting at a discount. Everything has to correlate, and then we have 5 minutes left until this hourly candle closes. So in 2 minutes, we'll go look and see, or in 1 minute, we'll go look and see how that 1 hour candle looks. And then when you're focused on lower time frame like this, focus on the lower time frame. Higher time frame is going to be something that's long term. You kind of glance at it and get an idea if it wants to go up or down, because the thing you want to use on a higher time frame is areas of interest, imbalances, highs and lows. But besides that, especially when we're making new highs and you don't have a lot of price action to use, you have to rely on what you see and not what's already there. But this is a good practice when it comes to you finding price action and developing a narrative. This is the best thing to do. Oh, I gotta get a video too, man. I keep forgetting. I gotta start recording. Okay, live with the team. Waiting on this price action. All right. So, how we get this consolidation? Now, in this consolidation, you see price push down, and then we pushed up. We also had consolidation here. Right here. And didn't price push up and then come back to that consolidation to potentially do this? Well, I didn't draw good enough. But Same consolidation as here. So we're just sitting at this consolidation right here, right now. And then you have this BISI or floor right here. And where's that? This is that 5-minute SIBI. Yeah, that's what risk is that? 30 points. Yeah. Like you got this inversion, this confirmation here, but the risk is 30 points, 34 points. That's the initial risk. So it's based off what are you seeing? So let's go to a 1 hour. Look at that. But you could be looking at the lower time frame and thinking it's doing these crazy moves back and forth, and then you realize it's not doing anything. Look at that 1 hour candle from last hour. Super tiny body, super long wick. So the bulk of the volume inside of this candle is right here. All this volume, and this is the market opening. So it's like, okay, it's price trying to show me that it finally wants to push to the downside. You have to get in sync. And then right now you see it's not even in sync yet, because if we're looking for it to push down, we want to see it be up here to get potentially the best opportunity. And then even in this, if you look at the midpoint of this wick from there to there, on top of the daily range that's on top of it. Let me put this on in 1 minute. So from there, that midpoint is 23,616. That's here. So let me show you. Ain't going there. I don't know why I didn't go on there. But yeah, 23,616. So 23,616. That's right here, which is this imbalance right here. So I have a premium. But if price breaks out of this and we continue to the downside, just simply follow price. Let's go back to a 5-minute. Let's look at a 15-minute first. So we had this 15-minute. It's kind of closed above, broke the initial stop loss. It came right back below, and then we punched to the downside off of this 15-minute continuation. Confirmation. But when it comes to the risk and where you're at, remember, you're using this as confirmation, not a trade. Not, okay, I gotta get in here and then I gotta sell off, because that's me looking at it from a lower time frame. Remember, you're using this as a confluence for directional bias. If this is the higher time frame, you're using for directional bias. So in this case, even though this model didn't play out, we closed back below the initial stop loss and we're pushing to the downside. So this is showing you bearishness. So that's what the model is doing, because the model on a higher time frame is not for you to buy or sell. It's for a confluence for directional bias, for you to get in sync with the narrative of what's going on. So there's different ways you're using the model. Either you're using it for a confluence as direction, or you're using it as an entry model on a lower time frame. But if the trade is giving you proper risk on a 15-minute, let's say this 15-minute trade was looking at 30 points and I only had to risk 10. Now that same one that's giving you confluence is also giving you great risk. So it's just like, okay, this is a bigger time frame. It's giving me a decent amount of risk. I don't need to go to a lower time frame to get better risk. But if this chart is giving you 30, 40, 50 point risk, and it's like, that's not trade you want to use it as a confluence. That's why the model is so flexible in what you're looking for. Let's see if this punches to the downside right here. But just looking at how price plays out and being able to take the right opportunities is based off how you look at it. You're trying to develop a story, build a narrative on what's going on, but that's based off how you look at price. You want to look at it like everybody else. You're looking at it as a big story. It's all one price. You want to see how price plays off of one price. So now let's see if this here makes a swing high here. If it makes a swing high here and then we punch up above it and then continue to the downside, or it's going to go back up. So there's that swing high. It just kind of closes like that. I was telling you guys yesterday, if this was like a higher time for like a 15-minute, and this is or hour, and this is a big enough range, my dealing range would be from this low to this high. If this kind of closes with this swing high and it doesn't break that swing low, and then the range will be between this high and this low. But price can very much go down, take out that low, take out this high, and then continue down. So there's that low. Let's see if it punches down. Because also we coming off of all-time highs. That drop can come. And then here's that consolidation right here. Right here. At Asian range high. Let's see what price does right here. This is just us focused on the 1 minute price action. Like I said, you want to wait for everything to be in sync. So you're getting this expansion on the 15-minute. Technically, this whole drop here came from this right here because you had your inversion confirmation, and then you had this whole drop down off of sell model. Now let's see how price, if it does this high here. There's the high. Now from that high, is it gonna go here or is it gonna push out? And if it pushes out, so if it takes this high out, sweeps this high, we continue to the downside. Or it can take out this high, punch it to the upside, and if it comes back down, use this as consolidation. Boom. Two different ways of looking at it. So you're looking at it either for sale or buys. Because you're realizing two things. Either this can be an expansion out of this range, because this is a 1 minute and you can have the continuation to the downside, or this could be that push to the upside. But if it's push to the upside, filling this wick, because we have 5 minutes or 6 minutes left until this 15-minute candle close. So this is the last portion of this 15-minute candle. So this could be retracement, but that's you knowing time. When you have a specific candle closing, the last portion of that candle, so if you looked at it in thirds or in quarter points, that last portion of that candle close is always the most important part. You got the beginning, the middle, and the end. So on every candle, whether it's a 1 minute, a 15-minute, or 1 hour, or 1 day, you have the first portion of the candle. Most times, sometimes it's mostly consolidation. It consolidates as soon as it opens. And then in the middle of that candle, you have the push up or the push down. And then the end of the candle, you have that retracement. Or it can be different ways, but a candle is always doing that and that type of sequence every single time. If you look at every hour and you separate it, and you look at every hour, just look at how the beginning of the hour is, the middle of the hour, and the end of the hour. Same as if the beginning of the day, the middle of the day, end of the day. So everything is doing the same thing. You got to know how to read it. So get that punch up. you know what to do if you see either or. I don't want to see it go up a little bit. You want to see it punch up. Got confirmation inversion right here. It's inversion here, and then you got that. But that's the breakout there. So now, once this candle closes, if it closes like that, then you can look at this as consolidation. This price will come back to it and continue to the upside. Because remember, you have that 15-minute candle closing. This is not the middle of the 15-minute. But also, this is the first 15 minutes of the hourly candle. So this is the beginning phase of the hourly candle as well. So you have to look at what's going on with the market. Get in sync with what's going on. So this high was swept here. So technically, you have this candle, this candle, this candle. So all these candles were higher than each other. So this one high was 576, 576.50, 576.75. Sorry about that. So yeah, 576, 576.50, 576.75. So it hasn't even made the swing high yet. Still punching up. So you can look at it like this. Like that. Price wants to continue to the upside. And this is you nitpicking on the 1 minute. Because guess what? Not if it goes below it, you're still in sync. That's the whole point. That's the whole purpose. Lizzie. Think about it. If you nitpick at all of this, if you circle this, it's all it is that wick. You're just dissecting the wick. Still don't swing high yet. All these candles are hiding each other. What's these two candles? You have 586 and 586.25. So this is the highest candle so far. Right there. Now you have the swing high. So the range from the 1 minute right now would be this. Current. Make that very clear current range. Let's make it a different color so you can see it. There you go. That's the range we're in right now. discount. My daughter. I won't take the guys right back. Good morning. All right, what we looking like? Okay, still in that range. Look at that. So we've been in that range, what, 1, 2, 3, 8 minutes. Something like this will throw you off because it's like, why is it not moving? It's always doing something for a reason. Every single time. Just got to find out why. And then again, all this range or all this price right now is inside of a wick. Just remember that. So the bulk of the volume is not here. This is what you're focused on right now because this is where price is at currently. Because with this range too, your focus, if let's say you wasn't focused on this smaller range, you'd have been focused on this bigger range for price to go all the way up here and do something super crazy, and you're like, why price is not moving? Because it's dealing with a smaller dealing range. So it's dealing with a smaller range. And then look how sneaky it's trying to be. These two little wicks right inside our premium. What you want to see now is it going to leave the SIBI open? That should be right open. Still sitting, and we still sitting inside of this consolidation at the same time. And then you can be so precise with this consolidation because you can say this range, or you can say where this range even came from. And then this range came from this push up, this push down, and then once we pushed up here, price started consolidating right here. So you can look at it even like this. Like you can be that redefined. But when you try to be super precise like that, you miss a lot of things. But look at that. That's 15 minutes. Come on. Make a different color so you can see it. separate them. 15-minute imbalance, and that 1 minute SIBI was left there. And a low was taken. A plan may be coming together, possibly. But just that's how you look at everything. Just make stuff make sense. Like, okay, why would it be going there? Why is it going there? Why did I look at that consolidation? Because I see prices going to this consolidation. Where did this consolidation come from? Oh, snap, like it came from here. Because it pushed off and came right back down to it. Now, even if this level doesn't play out, you're using it as a confluence. And then the imbalance we're talking about is this one. See how price handles this one. See it. You see it. You see it. You see it. You see it. Got two of them too. Remember, this is 1 minute. Does price want to go to the initial stop loss? Is it in a continuation to the downside? Look at the 15 minute. All this price action is wicks. What is price trying to tell you? Something like this, you would love to see price get above this consolidation. Took a buy. 15 minute. Oh. Which one? Wait. That's 2, 3, 5. I'm trying to buy it. 2. The premium 15 minute. Oh, okay. Yeah. It's a clear path. You just want to see it get above this consolidation here. That's the main thing. You said 553. 553. Okay, so you took out this one. So now you want to see it close above this. This tiny imbalance right here. Tiny, tiny, tiny imbalance. Tiny, tiny, tiny imbalance. It's still sitting inside this consolidation right here. Lizzie. Let's see. Look at that. You got above that. Wanted to break up out of here. Right. Swear. Finally. Now you want to stay above it. That's the thing. You don't want this to close. You want, if that can stay open, money. Because that just gives you more confluence. Okay, good sign. See how price treats it. Mixed into it. And we're just dealing with this consolidation. That's all it is. Like this range is not even a big range. You wanted to close that. That's what you definitely want. Nasty. It's that premium drop. Yeah, because it's the 1 minute. It's not going anywhere. So, but just imagine if that was higher time frame. That was like a 5 minute, 15-minute trade. That would have gave you a nice expansion up. That would have been like maybe 40 points, 50 points. But that same idea of how you seen price play out, how we seen the range, found the range, waited for it to play out, same thing you do in the higher time frame. And we're doing all this inside of a wick. But you see it dropping down like that makes sense. Why does it make sense? Because price took out the high. You just want to see it do a continuation. That's all. There's nothing you did wrong, or I looked at it wrong. Let's say like Thomas just did, and you had that trade idea, and you take the trade, and then it punches up, and then it does this, and you're like, man, see, I got it wrong. No, you didn't. You had it perfectly fine. You had the confirmation. You had an inversion. You had two confirmations. You took the second one, well, the first one initially, what tested to be the second one. So you took this one, and then price came right back to it again. But you take that one, and then price comes down, and then once price comes down to it, it takes out the high. It did it what it exactly was supposed to do. So if you beat yourself up about that, like, man, I should have did this, I should have did that. Well, you're looking in the wrong mirror. Because you did everything right. That's what it make you sick when they do stuff like that. Price action is so funny, man. Because remember, what low took out this high? It was this low right here. So does it make sense if price pushes up from here? Yeah. But look what it had to run into. This inversion and then these two confirmations. It's a tight range. This whole thing from top to bottom is 37 points. Top to bottom. So you can go from here to here. 47 points. The whole entire range. No, I just had a student text me. Is he in the live? No. He said, got too greedy. He to control my emotions. He said he's trying to do that work. Not on a lower time frame. Yeah. See, and stuff like if you have price action and you're busy and it's doing this and you're trying to go to a 1 minute while you're doing something else and try to do it, that's what's gonna lead to what just happened to him. Have him send me a screenshot. Markets like this will chop you up because you're just steady chasing price. But if you know where you're at, then you can pick and choose. It's like you got the option now. Do I want to take this? Do I want to not take that? Do I want to wait? You pick. Don't let the market pick for you. Don't feel forced to take a trade. That's what you don't want to feel. If you're feeling forced to take one, you're probably taking the wrong one. The only way I would say that's a good feeling is being forced. If you have just scared of being wrong and you're forcing yourself to take it because you see it. But if you're forcing yourself to take it because you just want to have a win, boy, listen, that's a dark road. And I'm pretty sure I had students that have been on that road already. So they can tell you, and they're, people for the most part just starting. So just imagine you thinking that that's going to go away. No, it's going to get amplified if you don't take care of it or learn how to get in control of it. So that's you stepping in front of it, having rules, not taking trades at 9:30 in the open, even if you see opportunities. Man, you know how bad I be seeing trades. I be like, man, I want to get into that. Just, take it up or down and then make my money be done. No, not your rules. So if you break that, what else you would do? Listen, boy. Then pay attention to this. You get this drop down, right? This drop down is happening 10 minutes before the 1 hour candle closes. Could we get expansion to the downside off of the sell model, off the 1 minute? Everything is syncing up based on where the market is at that time. He said he too embarrassed to send a screenshot. I'm like, just send a screenshot. That's hilarious. I've been there, man. Listen, it's only gonna get better if you push the narrative to do that. If you don't and you trying to run from it, you get chopped up. I put in that 1 minute PDRA on when it went back down. It broke the low consolidation, took a trade in premium, took another 15 points, second trade of the day. Yeah. Okay, so you took the sell off the premium, off that one right here at 10:43. Yes, sir. Oh, 10:47. Oh, okay. Yeah, 10:47 or 10:43 was good. I'm actually in the sale for 10:43. Yeah, caught that whole thing. Yeah, look. Easy call. Close. Easy call, fellas. Easy call. Right off that 10:43. Is that Asia range low? Crazy. And look, we navigated that whole thing from the 1 minute. Whole thing. All it takes is just for you to know where you're at and take the right opportunities. There was maybe 4 opportunities, I say. 4, we had one. I think we had this one up here, this drop, that small push up, and then this drop. I think there's one more. So let's see, 3 or 4 opportunities today. They just smaller trades. It's just that one was the one that had the expansion to the downside because it's based off of time. We had 10 minutes left to that candle close. So when I'm showing you opportunity, it's a multitude of opportunities. It's based off which one do you like the most, which one fits you, which one is giving you the best narrative for your story. My story was, okay, I'm kind of neutral. Price has pushed up. We looking for the push down. I'd rather the drop because I'm anticipating the drop more than the push up because we've been expanding for so long. But I don't want to go against the trend. Dang, okay, what do I want to look for? Well, I have to find smaller opportunities, but that means smaller profits. So it's like, that was 2 contracts. So that wasn't even a big move. It's just a nice move down. So then from there, you're building on that and how can you get to the next standpoint. So trying to figure out how to take the right trades, but also the right trades based on what you're seeing. Because that sell for me could have been more fearful for you because you're looking for buys instead. Then you look for a buy opportunity. So that's why we're looking for ranges, looking for confluences, looking for consolidation. And all these things are intertwining with each other to make the most sense. And try to put a story together and see what's going on. I had blinders on that sell because I was focused on. So perfect. When you have blinders on both, that's good. I mean, when you have blinders on one, that's good. But if you have blinders on, focused on one, then that's probably the narrative that you're most focused on because the opportunity that you see. Just because you didn't catch the sale, there's nothing wrong with that. But just in general, because I don't want you to think that me telling you how to turn the blinder off is saying that the blinder is a bad thing. It's not, because a blinder is actually a good thing if you know how to use it. That's what you want to do. Know how to use it. So when I'm coming to the market every day and you have both blinders on for buy or sell and you trying to focus on both, look at both perspectives. So when I'm looking at a daily range, I'm cutting price in half automatically right there. I'm looking at the upper portion, lower portion. Think about it. We just did it. We had this yellow range, which is a smaller range, and we weren't focused on the big range. We didn't focus on the big range at all. It was there. So you could have seen that we were in the bigger range and looking for a discounted play, which is nothing wrong with that. That's what you seen. But based off what I was seeing, a smaller range was being created because of the fact that price wasn't moving and we're inside of this wick. So look at it. When we had this high and this low, when I was looking at this range, that was based off the fact that how this played out. And then when we had expansion to the downside, this consolidation is only 2 candles. So then you like, okay, well, I thought consolidation was 3 or 4. It's based off what the market is telling you. You have to know how to put the story together to know which ones you want to use. And that's based off of like real life scenarios and how the market plays out. When you're back testing, you want to put yourself in those scenarios. But that's why forward testing or looking at the market from a different perspective also plays a big part, because the only reason I use those 2 candles as my consolidation is because I seen price tap it and then go back into it, and I seen how it did it. So that's what made me like, okay, dang, what if this is a consolidation? Boom. Right when I have consolidation, what am I thinking? I'm thinking either way. And if I have expansion one way, then I'm like, okay, price is bullish or price is bearish. But whenever I'm in a range of consolidation, I'm thinking both automatically. So now my blinders are down. So now I'm like, okay, just look for the best opportunity based on how price is playing out. That's why, like I said a couple times today, time played a big part in me looking for that sell or even the buy, but the sell more in general because it was the end of the hour. So now I'm expecting that volume to come in at the end of the hour, and then wherever we're at right now, it's just going to push whatever we're doing. And that's exactly what it did. And then boom, right then and there, you're able to capitalize off what the market is doing and take the opportunity and run with it. No, I think that was, so I think I did one contract. So that was in 2001. My bad. I thought about it. I wanted to do two, but I did one. So, but I just got sidetracked. But, so yeah, with that, to turn your blinders off, what phase of the market are you in? That's going to turn your blinders off automatically. Okay, are we in an expansion market? Yes, we are overall, right? Overall, but think about it. If you looked at it from a 15-minute perspective, a 5-minute perspective, a 3-minute perspective, a 1-minute perspective, what phase of the market are we in? To me, we're in consolidation. Cool. So we're in consolidation. I have to look at it from both perspectives because they both can play out based on swing highs and swing lows. So we had this high taken out. Once this high was taken out, then this low was taken out. Once this low was taken out, this high never got taken out, but these highs did. So me seeing all of this, I'm just putting everything into perspective. And on top of that, even if you wasn't looking at market structure, you could have seen when we went above that consolidation, and I said I want to see price expand from here and want to see this left open. It left it open. Boom. But it immediately started pushing down and creating SIBIs. Oh, it's not. Why is it doing that? That looks like an inversion model. Drop to the downside. This low that took out this low was never taken out. Dang, it could probably go there. Look what time it's punching back up. So you're seeing buying, but I'm seeing that price is probably reversing because it's back below that consolidation. So I'm putting everything into perspective as I'm flowing. And if it was hard for you to like navigate it, just replay it. We can that was a good session. I'm gonna end it there, and then we're gonna be back at it tomorrow. I hope you guys had educational phase in today's market where we're going down to the 1 minute and trying to make everything make sense and being able to flow with it. So even in the market where we had that push up and we watched the push up, and then you can sit there and be like, oh man, we missed the whole push up. It don't matter. You just got to get in sync with the market. If a trade is there for you, you take it. If it's not, it's not. And you walk away from there. And then the same thing I just did on the 1 minute, you could do on the 3 minute, 5 minute, 15 minute, 1 hour. It don't matter. Same exact concept. All I'm doing is getting in sync. That's all I did. I didn't come in with a bias of bearish or bullish. I had an idea of what I was looking at. You see, not one time I never mentioned Asia range low, because that wasn't my focus. I was focused on where I'm at currently, and then once I have a way of price pushing to the downside or upside, oh snap, it can probably go to here based off where we're at right now. So yeah, that's what I'm gonna leave you guys with today, and we're gonna be back at it tomorrow, my guys. I hope that was educational for you. I hope you were able to get some insight, and for the ones that need to watch it back, just watch it back and see how we flow with the market. That's all you have to do each and every day. And every day is not going to be a winning day. Every day is not going to be the best day. But if you can show up and get in sync with the market, it's going to at least give you the opportunity to get in sync with everything. So just focus on where you're at, where you're trying to go. I'll see you guys tomorrow.